We discussed yesterday that the previous day's candle was a market continuation. Therefore, we were expecting the Aussie dollar to touch to 0.7010 level. And from there onwards, we were looking for buy opportunities. And you can see that it did touch 0.7010, and it also went a little further than that, approximately 30 pips. But nonetheless, we are on the right track based on our analysis. And especially the candle from yesterday is a possible reversal candlestick formation. Therefore, what I'm going to be looking for today will be a break above yesterday's highest high, which is yesterday's highest high was at 0.7095. So we will be looking for a break above yesterday's highest high in order to enter long positions. Or in another way, we can also look for the day before's lowest low, which is at 0.7050 level, and you can also look for buy opportunities from there on. But make sure that you're using at least 35 pips stop loss. We don't want to be caught on the crossfire. So let's look at it on hourly time frame once again. We will see once again that the break above yesterday's highest high is a better opportunity for us to take a look at the market, for the fact that we have 200 moving average. So a break above yesterday's highest high will mean that the trend will enter into a bullish territory. Nonetheless, it will be a better opportunity for us to look for this pair's movement. So if you would be entering at, let's say, at 0.7102 level approximately, you would actually be entering long at a resistance. So looking at the previous couple of days, you can see that this is a resistance level. So therefore, I highly encourage you to look for the pair to touch that level and then make a low a little bit and then enter, let's say, towards 0.7080 level. Because once it touches that level, it needs to go a little downwards, so that you don't really risk extra 15-20 pips. 15-20 pips is also a good amount of profit margin for us. So once we see the pair touching 0.716 level, 0.7105 level, we will look for approximately 15-20 pips downwards test, and we will enter a long position with our stop loss of approximately 50 pips just below the lowest low of today. And we will be looking for immediate targets towards the level over here, which is at 0.7153. It's approximately 70 pips profit ratio. And the next target will be at 0.7206 level, and that's 120 pips profit ratio. That's gonna be it. Is the market giving us bullish opportunities right now? The first thing is that once the price breaks above the 200 moving average, we will have our 50-hour moving average change its slope as well. So it will be confirming that both of the moving averages are sloping upwards. Then nonetheless, it will be upwards moving trend, a bullish trend. If the price moves a little towards the 0.7150 level, we will see a crossover of 50 and 200 moving averages, and that will become a golden cross on hourly time frame, and that's also a bullish continuation signal. In that case, whenever that happens, our actual target is not going to be coming at 0.726 level, but actually it will go towards 0.7322 level. That's the overall bullish targets for this pair for this week, and it will give us approximately 240 pips profit ratio. Moving on to cable. Yesterday we said that I was indecisive about the market, and nonetheless the market was indecisive. It just stayed between our two Fibonacci levels that we were looking for, and nonetheless it is still the same. I'm not really sure of the trend yet, but all I can tell you at this given moment is that depending on the breakout, whether above the 61.8% Fibonacci retracement zone or below the lowest low of yesterday's candle, we would be looking for the trend confirmation. However, if if we look at the level over here at 88%, we see that there is a massive support level there, which is at 143.33 level. Therefore, I don't really recommend any short entries at this given moment, at least not sell stop orders. However, if you really want to short, you could consider shorting at 1.4670 level, which is at 38.2% Fibonacci retracement zone. So therefore, we will be looking for a break above 1.4530 level in order to long towards the 1.4670 level. And from there onwards, we can consider short opportunities. But once again, it's a can consider. It is not a confirmation that we will be using it. It depends on different variables in the market. So looking at the market, we can see that the 61.8% Fibonacci retracement zone is indeed a very strong resistance level over here. It has been tested multiple times, and even yesterday's high was capped just by it. So therefore, a break above it will be confirming that the trend is going to be going really on a bullish side. And in addition to that, we have the strange confirmation of the moving averages over here. Although the market is making a smaller higher highs and lower highs, higher lows, we therefore are looking for, once again, a mixed environment for the fact that the 50 and 200 moving averages are crossing right now. If the market goes above the 61.8 Fibonacci retracement zone, the crossover will be cancelled anyway, and 50 moving average will slope upwards. Therefore, the trend will be confirmed once again bullish. Let's move on. Euro dollar. If you remember from our discussion yesterday, we were looking for long opportunities just above the 1.1240 level. 1.1240 level was broken yesterday, and so far, if you haven't exited your entry, you are making at least 50 pips profit, or if you have kept the target anyway at the 150% Fibonacci retracement zone, then you should have already got anyway out of the market with approximately 60 pips profit. However, at the moment, I do keep my targets open still towards the 161.8% Fibonacci retracement zone. And until that level is achieved, my bullish bias has not changed. We are going to be moving to gold. Gold is, unfortunately, it didn't close above the $1,197 level yet. So my targets are going to be still the same. We just look for a candle to close above the $1,197 per ounce in order for us to go long for gold. Meanwhile, if we see a candle go below the 1,185 level, we will change our bias towards short. So below 1,185, we consider short. Above 1,197, we consider long. And our long targets will be at $1,216 per ounce, and approximately also, if that level is broken, we can consider $1,222 per ounce level. That's for bullish targets. Meanwhile, our bearish targets immediately stay at 1,177, especially for the sake of this specific candle over here, the 1 hour candle on the 8th of February that we had. And if that level is broken also, we will be looking for this exact level, which is 1,162 level. So from 1,185, we will be aiming for 1,162 level overall, and that's $200 or $20 per ounce drop in yellow metals price. Now let's move on USD Japanese yen. I'm gonna put it on weekly time frame, and I want to share this with you. I just drew these support lines. The two dark green support lines are major support lines, historic support lines, and the middle one is a minor, but it's also historic support line. So we are looking for USD Japanese yen three support lines, sorry. The first one being at 114.25 level, the second one being at 112.10 level, and the third one being at pretty much at 110 level. If you tell me, Yagup, why are these levels so important? Because they are not really Fibonacci levels. How do you define those? Basically, if you go backwards in your chart on weekly time frame, go all the way back to 2007, 2005 levels, basically just before the financial crisis. You will see these levels becoming massively important levels. You will see that each time the pair touched the 110 level, it was either resisted or got its most important support. And the same went for 114, 115 level. Each time it was tested, we had a reversal or market continuation may that be broken above. So therefore, we will be looking for these levels. Yesterday, the pair actually touched the first support level, and so did it today. So we will be looking for a break below the lowest low of yesterday, which is at 114.20. So anything below 114.20 will give us an opportunity to short, and our immediate target will be moved or will be shifted towards 112.20 level. That's for short opportunities. Meanwhile, let's also take a look at it on hourly time frame. We can see that there is a divergence on MACD, and the pair is moving on a tight range. And if you can draw trend line over here, you would see that it has tested its basically dynamic resistance level once, twice, 3 times, and this is the 4th time. Generally, based on my experience, whenever a dynamic resistance level such as this one is tested at least 3 times, the 4th or the 5th test is a breakout. So nonetheless, we can consider to long USD Japanese yen above 115 level, 115.20 level to be more precise. And we can just put our targets to the next resistance level, and that would be at 116.70 level. So that would be a breakout opportunity for us. Now let's move on. Crude oil, WTI. This is the US crude oil, WTI. You can see, since this webinar is sponsored by ADS Securities, I'm using their platform. On ADS Securities, they put the price of the crude on cents. How many cents it is? It's 2,844 cents something. Okay, so it means basically $28.41 right now at this given price level. So when we are looking at the crude, by the way, the crude Fibonacci analysis is completely different than any other Fibonacci analysis that you will see. Therefore, you will not see me analyzing crude on Fibonacci on weekly time frame, but I'll analyze it mostly on daily time frame. And my initial target basically for it is 138.2. It's completely different outlook most of the time. Okay, so we can see that it has been tested at 138.2%, which is at $27.68, and at the moment it is moving sideways. So basically, generally, whenever this happens, 138.2 level being unleashed, the next target becomes immediately at 88%. So this level, and I'm looking at $30 level once again. So if you are going to be trading crude, you better be looking for long opportunities especially for the fact that today the Fed chairwoman Janet Yellen is speaking. It's at 3 p.m. GMT, and you should be looking for optimistic words from her. Don't, once again, we are looking for optimistic. Anyway, the market has discounted the negative concerns of the slowdown globally. So nonetheless, it's not a surprise for us that there is a slowdown in global economy. Why to really care about it? But instead, we can take advantage of the possible optimistic words, and if that comes out, we will be immediately seeing the first target becoming at $29.10, and right after we will see the black gold, let's call it, testing $29.53, and if that level is broken, we will be seeing a $30.20 level. That's it so far for today. Thank you very much for your time. It's time for questions.